doing well. TGIF. We'll start with the signals actually, and so this is currently how we're situated. We've got AC buy and NC buy. We've got Euro Swiss sell, Kiwi Swiss sell, and the Aussie Kiwi sell. It's based on the bubble deviation logic. So we've got a spreadsheet that connects to MetaTrader 4, and we get signals from the sentiment deviation. So we're looking for strong bubble versus weak bubble, and this is currently how it's the thesis behind our signals. So we're basically pitching strong versus weak. When the retail guys go really one way and then they go the other way on a particular currency pair, we'll then trade that deviation between strong and weak, and that's it. So that's it in a nutshell. The concept is very good. The tricky part is the TP and SL, but it seems that we might be okay currently with 50 pips SL. It's slightly annoying with GU yesterday because we could have had a 60 pip stop loss and we would have been okay. And there was the move there. This candle wick here, I think, and it basically, yeah. So we had a 50 pip stop, but if we had a 60 pip, it would have been okay, and then we would have got out a profit. So this particular currency pair is quite nasty, to be honest with you, the way it spikes. But had we have a slightly wider stop, we would have been okay. If we're going to increase our stop, we also need to increase our trailing stop as well. So whatever happens here, if we're extending the SL, we also need to extend the TP, obviously, because we need to maintain the R, which is your risk multiple. So GU would have resulted in a profit, and we would have got out a profit, but it just had to do some naughtiness, and just that little spike there. No doubt there's probably an SLC there, an old stop loss cluster, and it just had to probe those stops before falling. This is one of those things. So we're going okay. I'm quite happy. We're going to let this rest, and then we'll close the robot as we did last week, about afternoon, 1 o'clock, 2 o'clock. And then we'll just have to see how we go. GU is now pumping a bit. I don't trust this. I wouldn't trade this manually anymore. It's just too horrible. The Euro Pound potentially, but not GU. It's just a horrible pair. And the Bank of England are sending out a lot of mixed messages, and probably you could also argue the Fed are as well. So it's not a clear currency pair to trade for me. And it probably should be falling because we've got the spread deviation between the gilts and the yields from the US as well. So we should see weakening on this. All right, but we'll have to wait and see how we go. And there's no trade on pound, which is good. All right, so let's look at our indices, if I can find it. It's in here. And DAX. Now I wonder, this sudden move here, probably could have been a stop run potentially. And you do note that I've taken the rectangles off. These were our punishment zones. We're going to start with new punishment zones next week. So we can basically map the last few. We don't have to have old ones, because whether or not they're going to have like pertinence, if they're going to have enough power and importance to keep, because we might just be looking more near term for punishment zones. The punishment zones are near term supply demand. So this is one here, for example. We can map one up here. All right, so we know that's a resistance. So you can therefore trade off that and have that as your stop loss, because that's where they've gone long, right? So we can definitely draw one here. And we just have to map it properly. It's here. I think it's here, this one. So we see how we normally get a test of the box as well. Yeah, it just needs to go slightly right, but yeah, it's that candle there, but that's fine. And so we came down and we came to test it, and we've had a big move since. All right, so there's one there. You could also argue we probably created one here as well, like a double. And good if you spotted it. I was saying to be careful about selling this, but I just recommend this to be careful, generally speaking, with indices, because they've got a habit of just pumping. And see what's happened there. So we had a double resistance, it's got a double supply, and it's now currently going sideways. So that's what I was saying in Discord. There's got to be, might have been like a stop run naughtiness there, and just because we're going sideways, we could potentially be going a little bit sideways. We are making a triangle. Can you see? And that could be a bullish scenario. We're going to have a triangle break. This here, kinda, and oh yeah, that's fine. And oh, these tools aren't very good, I've got to admit. Something like this. All right, so we're going to have some kind of breakout. All right, so breakout to the downside, quite clear. Break up to the upside, quite clear. Another thing is because we're sideways, it's a little bit of a gamble. We are a buy at the big picture, so from a big picture perspective, we should be going up higher. On the dynamic over time, it's not very clear because we're sideways. So we can see probably a move here from this triangle break. Okay, you see there's like a compression of price, and if we had a Bollinger Band on here, we would see a Bollinger Band squeeze of volatility. So we're going to see a breakout, probably to the upside, but I'm not sure because we're sideways. There's DAX, S&P, and yeah, so we are currently okay. We've not made the sell yet, but we're quite close. We want them to sell it. We want this number lower. All right, we don't want that number higher than the moving average. Currently we're okay. We don't really want to cross over because we do continue to fall, and we are a buy at the big picture. And you can just see we're quite well supported as well. Just look at these lows. So that's the S&P. So probably more upside, but we don't want to get the crossover. I kind of see this. I see this happening as we're going to go like this over time. See with my mouse, and we're going to come into a buy. All right. So I've seen this happen a few times. We're going to see this nice move on the MA, and it's going to come down really gradually. By coming down gradually, it's going to be a buy over time. So keep an eye on this. It could be a good buy if we cross into green, and then we're looking for supports. Perhaps if we go above that, we can have that as our stop loss, potentially, just to avoid this. It's like clutter and this chop. So we're like very, very chopping around. But if we go above there, that could be a stop loss, assuming that we go into green, which I think is probably going to happen. You can see the curvature of the MA, and it's probably going to take maybe up to Tuesday. All right, Monday or Tuesday, we're going to wipe out quite a lot of positions, and it'll come down towards buy. But it all depends what happens here, because if they go long, it won't be good, because there has to be someone to counter that trade, and it will fall. So it's very, very tricky right now. We're basically dead on the MA. I can see this happening where it's going to come down probably Monday, Tuesday. Today's going to be a bit choppy, I think. And so we've got to be careful. I'm going to keep an eye on this today, I think. So I'll keep an eye on the trading station. And done DAX, S&P, gold, where are you? And I didn't get rid of the boxes, but it's fine. I was supposed to have got rid of these boxes and the lines and things. But yeah, so there's one here. We've got a zone below. Okay, so we made zones below. We did pump a little bit, and then we continued to fall. I was wondering whether or not this was because of the yields were pumping and the debt ceiling crisis as well. And it's obviously put a little bit of pressure on gold. The yields are pumping. When they do, they'll hurt the gold prospect. So I'll wrap up now, and we'll just have to see how we go today with the signals. I don't forget we're testing, so it has to be on demo account only. But you can see how we've got support on gold. So I mean, if you were to enter now, it's quite a wide stop. All right, so you'd have to have got woken up 1, 2, 3, 4, 5, 6. Yeah, you'd have to have been trading over Asia to catch that move. And I woke up an hour ago, so obviously I would have missed that. And so maybe it might be okay, but it could be a good short here below 1937. We've come a long way off the highs. It's been very much a roller coaster, but the sentiment has been proved quite useful. There's a technical level there that we used in conjunction with the sentiment, and so they fell. It fell the price because they went long at the break. See, that was a good trade if you caught that. Very good trade, in fact. So 2018, We're 1950 now. So that was a good one there. So if we caught that, that would have been great. So wrap up now, like I say, and we'll keep an eye on the signals. And maybe they'll be good, maybe they won't be so good, but at least we're testing now. A couple of weeks, I'll probably go live, but we just need to make sure the TP and SL is going to be okay. And we could also maybe avoid, particular currency pairs. Maybe if one misbehaves, we can probably look to exclude it. I'll wrap up now. Have a great weekend, and I'll speak to you guys on Sunday for the card data. Remember to trade safely as well.